Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka and Japan have signed a landmark economic cooperation agreement, marking a significant step towards strengthening bilateral trade and investment ties. The Sri Lanka-Japan Intergovernmental Economic Policy Dialogue held at Ministry of Finance concluded with the signing of a Memorandum of Cooperation. This agreement formalizes a strategic economic roadmap between the two nations. According to the government, the deal introduces plans for an industrial economic corridor and a comprehensive review of Sri Lanka's export capacity. A dedicated working group will be set up to operationalize the corridor. This move signals a shift towards deeper and more structured bilateral engagement. The development comes at a time when global trade patterns are undergoing major changes. With America First policies and universal tariff regimes under the second Trump administration reshaping international trade, countries across Asia are seeking greater strategic autonomy. Sri Lanka and Japan appear to be strengthening regional partnerships as a hedge against volatility in the U.S. consumer market. The dialogue also included participation from the Japan External Trade Organization as well as leading Japanese firms Itochu and Mitsui. They shared their business experiences and perspectives on operating in Sri Lanka. Officials expressed confidence that the renewed cooperation would attract foreign direct investment and help create a stable rules-based trade environment. The agreement is seen as part of a broader global shift where middle powers and regional economies are building stronger regional clusters amid rising trans-Pacific tensions. Analysts say this partnership reflects the growing momentum towards a more multipolar economic order. Yields on Sri Lanka's restructured international sovereign bonds have declined steadily since the 2024 debt exchange. Treasury Secretary told investors that the trend reflects renewed confidence in the country's reform path despite the severe impact of Cyclone Ditwa. During an investor call, he said that the trading performance of the newly issued sovereign bonds show that the trust has been restored. He explained that since their issuance in 2024, yields have generally decreased except for a brief spike in early 2025 triggered by global geopolitical tensions. According to data presented during the investor call, based on Bloomberg bid yields as of 6 February 2026, yields range between 3.6% and 8.4% across maturities. Short-term instruments are trading around 8 to 8.5%. Longer-term bonds have compressed towards the 5 to 6% range. The longest maturity stands at 3.6%. The chart tracking post-default instruments, including governance-linked bonds, macro-linked bonds, and USD step-up bonds, indicated that the Cyclone Ditwa had no significant impact on yields. The Treasury Secretary stressed that even though the cyclone was a major shock to the country, it did not materially affect bond market performance. He further noted that Sri Lanka remains on track to meet performance triggers embedded in its restructuring instruments. He pointed out that the innovative governance-linked bonds will link coupon payments to revenue performance starting in 2028 and said current indicators suggest those features remain achievable. On macro-linked bonds, he said debt indicators continue to improve compared to earlier International Monetary Fund program reviews. He stated that Sri Lanka is on course to meet all targets under the IMF debt sustainability analysis with some margin, even if the first threshold of the variable macro-linked bonds is triggered. Addressing the broader restructuring process, Treasury Secretary said Sri Lanka is very close to completing a debt restructuring fully aligned with IMF program parameters. He noted that the agreements have been reached with creditors representing nearly 99% of external debt, with more than 92% already restructured. On the IMF Extended Fund Facility, he said continued adherence to structural reforms has helped maintain strong program performance. He confirmed that IMF staff reached a staff-level agreement on the fifth review at end of 2025 with executive board consideration expected shortly. Upon approval, Sri Lanka would gain access to further $350 million, bringing total disbursements under the arrangement to about $2 billion. The program is scheduled to run through 2027. He also stated that the fiscal impact of Cyclone Ditwa has been fully incorporated into the 2026 budget without derailing consolidation targets. Stronger than expected revenues in 2025 have helped absorb recovery costs. In conclusion, the Treasury Secretary emphasized that policy continuity and reform implementation remain central to sustaining market confidence and restoring durable access to international capital markets. The Central Bank of Sri Lanka has indicated that there is room for further interest rate cuts. However, Governor Dr. Nandalal Veerasinghe says the bank will act cautiously to preserve buffers against potential external shocks. Speaking ahead of the upcoming policy meeting on 23rd September, he noted that while there is space to support short-term growth, maintaining stability remains a priority. The CBSL reduced its overnight policy rate by 25 basis points in May, bringing it down to 7.75%. According to the governor, the rate cut was smoothly transmitted to the market and contributed to stable financial conditions. He explained that monetary policy can provide short-term support to close the output gap. But he stressed that excessive loosening would not deliver sustainable long-term growth. He described the current stance as balanced and said future decisions would be forward-looking and based on data. Sri Lanka's economy contracted sharply in 2022 and 2023 following a sovereign debt default, high inflation and severe shortages of essentials. The crisis led to a bailout program with the International Monetary Fund. Since then, macroeconomic conditions have improved, inflation has eased, foreign reserves have strengthened, the rupee has stabilized. The governor said sustainable growth of around 5% remains the target. He emphasized that fiscal discipline and structural reforms rather than monetary easing alone are key to achieving that goal. He identified foreign direct investment, support for small and medium-sized enterprises, tourism and export competitiveness as critical growth drivers. On external stability, the central bank is focused on maintaining adequate foreign reserves. The governor noted that before the crisis, Sri Lanka faced annual debt servicing needs of $6 billion with only $8 billion in reserves, a position that becomes unsustainable as reserves fell to zero. Looking ahead, average annual external obligations are projected at $3.5 to $4 billion over the next decade. If reserves are maintained at $8 billion or more, he said the country would be in a significantly stronger position. Current reserves stand at $6.2 billion. He also pointed out that the recent growth has been close to 5%, exceeding the International Monetary Fund's baseline requirement of 3% for medium-term stability. This stronger recovery, he said, could help Sri Lanka reach a more resilient and sustainable footing sooner than expected. In conclusion, the governor stated that steady and sustainable growth is essential, adding that short-term gains alone would not be durable. Sri Lanka's construction sector has entered a phase of cost stabilization. According to the latest Ceylon Institute of Builders Sri Lanka Construction Cost Report 2025 Colombo, prepared by VForm Consultants Limited, Colombo continues to maintain one of the most competitive and construction cost position in Asia. The report benchmarks construction costs across 6 major building categories. These include high-rise apartments, prestige office towers, 3-star hotels, 5-star resort hotels, large shopping complexes and industrial warehouses. Findings show that Colombo recorded the lowest construction cost position in 5 out of 6 categories analyzed. It ranks second lowest for industrial warehouses. Overall, Colombo was placed as the second lowest cost city in Asia in aggregate construction cost per square meter. The comparison covered key regional cities such as Singapore, Hong Kong, Seoul, Shanghai, Beijing, Kuala Lumpur, Jakarta and Bangalore. A major contributor to cost stabilization was the reduction in several key material inputs. According to Construction Industry Development Authority, statistics cited in the report, reinforcement steel prices declined by 21%, fuel prices fell by 10%, concrete prices edged down by 1%, while cement prices increased by 3%. The report explained that lower fuel costs contributed to the decline in concrete prices. Meanwhile, cement prices increased due to higher global production input costs. The Sri Lankan rupee remained relatively stable during the review period, with the US dollar exchange rate fluctuating within a margin of about 1%. This stability helped reduce volatility in imported material prices. However, when measured in local currency terms, construction cost increases appear significantly higher. From 2020 to 2025, construction costs rose by 13% in US dollar terms. In contrast, costs increased by 81% in Sri Lankan rupee terms, largely due to exchange rate depreciation over the period. Despite the decline in material costs, overall construction costs rose moderately in 2025 compared with the previous year. This increase was mainly driven by labor-related factors. The report highlighted statutory wage adjustments and skilled labor migration overseas as key drivers. Construction Industry Development Authority indices indicate that skilled labor wages increased by approximately 5% during the year. The sector also showed signs of economic recovery. Construction activity recorded a 12.2% growth in the third quarter of 2025. Gross value addition reached 499.9 billion rupees. There was also expansion in related subsectors including mining and material supply. The construction cost report serves as a critical annual reference for government infrastructure planning. Board of Investment project appraisal, foreign direct investment structuring, multilateral development feasibility indices, and private sector and individual house building decisions. The report further noted that transparent and up-to-date cost data remains essential for long-term industry planning and investment decisions. Overall, the findings indicate that Sri Lanka's construction industry is undergoing post-crisis realignment. While absolute construction costs have increased, Colombo continues to retain its relative cost advantage within Asia. This positioning reflects the sector's ability to absorb fiscal, labor, and energy-related pressures without losing regional competitiveness. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.66%, down by 6 basis points. The 182-day T-bill rate stands at 7.99%, down by 8 basis points. And the 1-year T-bill rate stands at 8.27%, down by 4 basis points compared to the previous week. Thank you for watching. We'll be back next week.